This is my financial disclaimer so I don't get sued.
Good morning, good evening, good whatever time it is you're listening to this. I hope you're having a good one. Let's take a look at what we're covering in today's video. In this video, I'll be taking a look at the datasets, earnings, and going over a technical analysis of the SPY for February 12th, 2026. And just a reminder, I am starting to do live streams each and every day, Monday through Friday, 8 a.m. through 9:30 a.m. Eastern Standard Time. If you can't watch the live streams, I do save the VODs in the videos on the channel. Highly suggest giving a watch, as I do kind of explain exactly the process I'm going through. Um, if it's for different trades, if I'm seeing data sets, whatever it might be. So with that said, let's go ahead and jump straight into the data. Now, we did have a lot of data on Wednesday, and some of this data came in fairly strong, which was extremely surprising. Now, the treasury market overall really did not buy what this data provided, and I'll explain that why in just a little bit. But the average hourly earnings year over year actually improved by 1%, or 0.1%. The forecast actually expected and anticipated weaker numbers, so I did as well. I don't agree with that. Average hourly earnings month over month also came in higher. The forecast expected a 0.3, it came in at 0.4. So again, much higher than anticipated. The non-farm payrolls, they came in at 130,000, which, excuse me, again, I don't agree with at all. We've been seeing um, the ADP numbers and just the overall numbers, and it doesn't make sense. Even the forecast was expecting far fewer numbers. This is kind of blowout numbers. Um, with that said, this is still weak overall. This should be again closer to about 180 to 250,000. The participation rate came in slightly higher. Again, this is suggesting that there is more people looking for jobs, that there's less unemployment overall, and that more people are being hired. I still disagree with that, but that's neither here nor there. The payroll benchmark numbers came in extremely high, which still is, underneath the amount that it should be. I disagree with this number immensely. Treasury market did not buy this number one bit, and this would be saying that pretty much the last few years now have been totally incorrect, and that the whole immigration thesis that uh the large part of the labor market losses were from the illegal immigration jobs that have been closed off. Now, this type of number is saying that that's incorrect, that that has not been the case, that suddenly we're up, basically a million jobs. Now, this is on top of the fact that the Fed and everybody have been saying that the benchmark numbers have been overstated by roughly a million. Um, so I disagree with this. There very likely will be a revision downward. So yeah, enough about that. Private non-farm payrolls, again, massive blowout number. I don't agree with it. The unemployment rate dropped. Now, I went to the actual state unemployment rates, and granted, the state unemployment rates haven't been updated since, I believe, January. Now, going through each and every state, pretty much every single state's unemployment rate increased besides California. So I do think that California is carrying a lot of the weight. Um, Again, I still disagree with this unemployment rate, but that doesn't matter. Um, we had the 10-year no auction come in pretty neutral today. Um, This was actually a fairly good auction, seeing how the 10-year Treasury yield has been fairly elevated. I believe it's still at 4 point something, 4.2% something. We will go over that though. So a lot of very hot data today. I really don't think the market bought it though overall, because this is the type of data that would have really suggested that treasuries would have absolutely dumped, that equities would have absolutely dumped, the dollar would have risen immensely, and we didn't see any of that today. We actually saw the treasuries gain weight for, a decent majority of the trading session. We saw the yields drop. We saw the market actually have a fairly bullish day besides after the open. After the open gap down, uh market regained a lot of weight from the data set. And again, this type of data set would be absolutely destroying some of these numbers. I mean, the 10-year treasury auction today would have came in much, much higher yield. We would have seen TLT just losing dollars worth of weight on the share price. So I disagree with these numbers. The ADP numbers have been showing us that there's been immense weakness. Um, I'm just not seeing it. So very likely a lot of these will be revised. Um, Not much more to say about that. We need to see more data now. That we have all this extremely hot labor market data that came out of really nowhere. Going into Thursday, we have the continuing and initial jobless claims. I'm really not even going to speculate on the forecasted amount or anything. These numbers were so overshot that basically we should be seeing the initial jobless claims come in almost at zero. So I don't I don't buy any of this. So we'll see what the jobless claims come in at tomorrow. And we have the existing home sales at 10 a.m. Important to look over, but nothing we're actively tracking right now. So that's that. I don't really expect a major market reaction out of the existing home sales unless there's some massive, massive, you know, massive number in the data sets that come in hot or are cool. But I don't really anticipate that. We have the 30-year bond auction tomorrow. Again, I don't think the Treasury market buys yesterday's data at all. And even with the Atlanta Fed GDP going down on Tuesday, I didn't get a chance to talk about Tuesday's data, but a lot of this data still came in very weak. The employment cost quarter over quarter came in weak. So I don't know where they're getting these numbers. We've been seeing decreases in hiring and everything in January. So yeah, I don't know where they got those numbers from. So yeah, we have the 30-year bond auction tomorrow. The Treasury market so far hasn't been believing the numbers, so I do anticipate the yield to basically come in neutral unless we see something with the jobless claims. Basically, like I mentioned, the jobless claims coming in extremely cool. Um, Something like that to really shift the 30-year, but so far Treasury yields have been pulling down. Um, I'll kind of go over Friday as well, just because streaming the last few days hasn't been too hard. It's just been a very, very large shift in my schedule and everything. So, um, I can't promise I'll make a video tomorrow. I'll try though. Friday we have the CPI in the morning. That's obviously going to be a big deal. I really don't know what to expect, seeing how we got extremely elevated numbers today. Everything else is telling us really that these numbers are going to come in cooler. The forecast has these numbers fairly neutral. The CPI year over year, they do anticipate to come in cooler, so we'll see, what they give us. I 100% disagree with today's data though. This is just completely out of the blue. This is saying that all the data we've been seeing over the last basically 2 years now has been incorrect. So, um, I have no clue where they got this from. Someone did something incorrect here. Not much to discuss with the earnings. We do have applied materials in the afternoon tomorrow. Nothing really major in the open. We didn't really have anything major in the afternoon on Wednesday today, so really nothing until tomorrow's close, which applied materials can move the market a little bit, but the market cap overall isn't super, super large. Again, it's not an American company, so they're just not going to hold the same type of market cap that um, you know, an American company would. So really not much left with the earnings this week. I do think the earnings start to pick up not next week, but the week after. Yeah, 2 weeks from now we have Nvidia, so that's going to be exciting, but nothing really exciting for the rest of the week. I wanted to quickly show the Fed watch today as well because this pulled down for the odds of a 25 basis point cut in March, pulled down from 20% all the way to 5% today based on that data I was discussing earlier. So again, that's really showing how large of an impact that data set was. And truly, if that data was to be believed, this should be down next to basically a 0%. And they should actually be considering doing rate hikes at this point. So, um, yeah, we'll leave it at that so I don't ramble.
If you're enjoying this, please check out my Patreon. For just $1 a month, you can join our community chat and access our tools like the Unusual Whale Spot and our own personal GEX and DEX market positioning. My $12.99 premium tier gives access to my personal trades, 2 live classes a week, which are on Wednesdays and Sundays, and direct support from myself. The links to join are below, but you can also join through patreon.com/wooksy. Thank you for supporting me to help you build skills for a lifetime.
And getting into the technical analysis, as always, let's ensure our daily time frame is turned on so that we can go over the moving averages and Bollinger Bands. So today was a little bit of a wonky day. The market opened fairly high, almost at an all-time high level. However, we had a major rejection downward. Large part was due to the data set in the pre-market. However, it really didn't hit until closer to the market open. As you can see, it started pulling down in the pre-market, but it wasn't really until the open that they really nailed us. Um, I wouldn't say nail us because we actually did take puts at the top. Wrote it down to the mid band today on the 5 minute time frame. Had a very nice scalp out of it. So we entered pretty much right at the top, exited right around the 9 or the 694 range. Um, Held some runners. Some people did short all the way down to towards the bottom. That was awesome for them. We took calls on the way up, faced some chop. There was some exits in here, which were great. I was looking for this to turn into a cup and handle to push upward, but that did not happen. Main reason why I was looking for that, and I know this is kind of jumping into things prior to going into the moving averages, but there is a point to this. Um, we had a very, very large consolidation of a very key level today. Now, I know I just put a square around it, but this is the upper consolidation channel. So we did pull down underneath it. Whether that was just a liquidity grab, we'll see. But so far, we're seeing that this is looking very strong to continue upward, um, and building support above this channel. That's kind of exactly what we're looking for if we're wanting to continue seeing bullish action to the upside. Now, with that said, the 5 mile is currently at 689.25, but it will be opening very likely around that 691.20 range. Might be higher, might be lower. Just make sure you mark it because it will be very important tomorrow. We did have the 10 mile and 20 mile pull downward slightly today because we did have some selling. Now, I do anticipate the 10 mile and 20 mile to open up slightly higher tomorrow, even though we did have a red day. Technically, the market price closed above all of the moving averages, so it still should pull all of those levels upward. Um, with that said, we have been seeing the 20 mile pulling downward very, very, very slightly over the last few sessions, which has been slowly pulling the upper Bollinger downward. And the lower Bollinger has basically just been sitting pretty much right at the exact same level. Excuse me. Now, we did have a weird day today, as I mentioned. With the price action we did have today, technically this moved downward to um the 689.18 could have been a 5 mile test. However, with the 5 mile being currently at the 689.25, that would be suggesting that it did test the level all the way. I don't expect that to be the case because if we sold down all the way to the 689 level, we would have been seeing the 5 mile very likely around the 688. So I didn't really count that as a 5 mile test or even a 5 mile bounce. Um, that was just some very strange reaction to the data on the open and everything. Um, with that said, the 5 mile is again moving upward. The overnight price is at 693.01, so slightly above where we closed at. We closed at 691.96. Um, with the 5 mile being around that 691.20 range tomorrow, we can start to head downward to retest the 5 mile. I have been anticipating a 5 mile retest for quite a while now. One thing I am looking at though is that we're getting very, very close to reaching the top of this cup. We do have, and I will look at the 4 hour time frame to kind of show this. I'm going to hide the moving averages and the Bollingers for a moment. But we're getting very, very close to reaching the top of this cup that we've been discussing now for quite a while, where slowly pulling upward, creating that cup to the upside. From that closure of the cup to the upside, we do expect a handle downward. Now, this is kind of the thesis for tomorrow is that one, we're going to retest that 5 mile level basically right at the um this upper consolidation channel. So it would be a move downward for the day, then pull upward, create the top of that cup, and from the top of that cup, then we can look for the bearish structure, pull downward, finish the cup out, and have the breakout. I didn't really see evidence entirely of the breakout today. I was still positioned in calls, but with the positioning in calls, I wasn't, you know, betting the bank on it or anything. I was just seeing a lot of potential upside signals. However, we still had a very elevated VVIX. Again, as long as this is above the 98 range, that does show that people are, actively putting insurance on their equities, on their SPAC's future vehicle equities, um, which again, um, that coincides with selling. Now, truly what we saw today, can call it a diamond on the day, whatever you want, that's fine. But really, this was the dealer closing or, selling butterflies. They sold calls at the top, they sold puts at the bottom, and, expired them between the two. And that's kind of where that diamond comes from. But it was just simply dealers selling positions on both sides and letting them chop into basically oblivion. Sell the top, sell the bottom, let it chop out, and then, finish to the next move. We do have important data over the next few sessions, so they might just be trying to chop out to buy some time for that. But with this chop and everything being above the upper consolidation range, for me, that's still a very bullish signal overall. Now, we did see the ADL drop a little bit today. Actually, over the last three sessions, we have been seeing the ADL drop. Now, this can be alluding to potentially shifting towards selling. However, again, we've been seeing some very large bounces out of this red liquidity range, and every time we do, it generally leads into a higher high. So, still on the same thesis of that, we have not been seeing the moving averages or anything really suggesting that that's going to break. Technically, the 5 mile will be above the 10 mile and the 20 mile tomorrow on open. So that will be a bullish positioning of the 5 mile. Um, the only thing I'm really concerned about, again, is that with the 5 mile being so close to the 10 mile and 20 mile, this can shift to the downside very, very quickly if they want to turn on the selling. Now, the VVIX still has been elevated. We have been seeing, and let me go to the USD JPY. We have been seeing active selling into a buyer's market, and we've been seeing the USD JPY, the dollar and the yen starting to unwind slightly, which that's overall a good thing for the market, but that does mean that the Bank of Japan is trying to sell into a buyer's market. We know this because we're seeing the yen gaining strength. We're seeing the dollar continuing to lose weight. So these are bullish signals overall. We've been seeing the high yield corporate credit still holding fairly strong overall, even with today's selling. Um, it really didn't sell down very far at all. It pretty much held its range. We saw within the, let's see, where's liquid? I apologize, I'm blind. Give me a moment. Within the investment grade, um, corporate bonds, we still saw a lot of strength. We did see a little bit of selling, um, about 20 cents off the top, but again, overall, this is still strength. If we were seeing real selling within equities, if we were seeing real volatility picking up, we'd be seeing some major candles within liquid, within HIG. As you can see, this can really sell downward quite a bit within a single session if the risk is actually there. We still have, for the most part, silver and gold and precious metals have been bullish overall. We do have a little bit of selling going on in the after hours, but again, there's still a lot of bullish signals towards the upside right now. Um, we still have the actual VIX underneath the $20 range, and it still has been slowly losing weight almost each and every session. So again, still seeing a lot of signals coinciding with a bullish push to the upside. So that's the thesis currently. Unless we see some major shifts into the selling direction and some actual signals that are showing selling, then currently we are bullish. Um, Bitcoin, we are expecting and anticipating a lot of this selling to the downside to start heading upward. Um, Again, we did have a lower Bollinger move here. We should start seeing this 74.4K range being reclaimed unless we're going to really just continuing or continue selling offward. Um, Not really anticipating it though, but we will see. February is a very weak month for market overall, and Bitcoin has been very, very attached to equities in terms of how funds have been buying and selling it. So, yeah, that's the video for tonight. Uh, Again, thank you all for watching. I appreciate each and every one of you. I do stream during the morning trading sessions, from 8 a.m. till about 9:30 to 10:30 a.m. Again, Monday through Friday. So I hope many of you can join those because there's, great lessons to be learned during them. Yeah, going to end the video here. Thank you again for watching, and I will talk to you in the next one. Take care, everybody.